Hello guys, welcome to the session for today. I'm just going to have a quick look at the attendee list. So hi guys. So as always, those of you that are live with me, if you have specific markets that you want to look at or any questions that you have, by all means, let me know in the chat box. I'll keep an eye on it to obviously make sure that you guys that are here with me live get the most from this session. Obviously, if you're watching recorded, but you have questions retrospectively, you can email me. My email address is here, becky@tradictive.com, so you can get me on that. Now, there's also, and I will show you very quickly, another place you can go that might help you, which is this link here, tradewithufos.com/Becky. From here, as you can see, there's apps and courses, coaching, one-on-one coaching. But the main area that you should find helpful is this live session notes area. We'll fill this in together today, where you can track the trades that I'm placing in stocks, Forex and cryptos on the sessions that I do, and track them, what happened to them, why did we close out early for either a loss or a profit, why would we cancel a trade, why would we be break even, and just kind of understand more about how we manage these trades. And you can get that from this section here. At the bottom as well, there's also a question and answer area that can be helpful. Sometimes the answer that you're looking for is already here, so you can use this to help. Okay, so let's get cracking and look for some Forex and potentially cryptos, but we'll stick mainly to spot Forex, look for some opportunities. Now, first things first, we just want to check out our calendar. What I'm going to do here is filter by our main countries here. And then I only want to look at high impact news. And the reason I only want to look at high impact news is I want to know what is most likely to create volatility. I'm going to look at it for the next week. So between now and the 7th. Okay, nice. All right. So today being Wednesday, we've already gone through a lot of these. So we've got things coming out early hours of the morning, Eastern time tomorrow that might affect the euro. And then the US dollar maybe at 10 a.m. and then on Friday, US dollar as well. So what we might want to do is avoid US dollar trades, not entirely. What we could do is just make sure we don't double up on these trades, or you could place all of the US dollar trades that you want, but reduce your risk per trade. But let's have a look firstly at what opportunities we have. Hi there, Roman. I've just seen a good afternoon. So good afternoon to you as well. Nice to see you as always. So bringing up TradeStation here, we use this as a scanning tool in order to help us identify where we might have better opportunities. Now, it doesn't mean just because this highlights an opportunity that it's highlighting a trade that we should take. It just means that it's a more likely opportunity worth our time to look. So we'll start with the US dollar pairs. And bear in mind, we might see volatility in the dollar in the coming days, but we'll start here and we'll look at bigger time frames as well, which is also a better way to mitigate the problem of volatility. So we have at the top here, the Australian versus the US dollar on a daily climate. We've got a near sensible short. We want it to say near and sensible. We don't care if it's long or short, it's whatever the probabilities lie. So this is what we're going to look at. It's the Aussie versus the US dollar. And we'll bring it up here on MetaTrader. I'm going to use different platforms here so that depending on what you guys use, hopefully you're seeing something that helps you. So we've got the daily on the left-hand side, and we'll use the 1 hour for the right-hand side. Now, if we were using a different platform, we might use a 55-minute time frame here, but we can't obviously use really outside of the set time frames on MetaTrader. So we'll stick with the 1 hour. And what we're going to do is we're going to look for opportunity. I'm going to tell you straight away, we won't actually be doing anything here, and let me explain why. So we have a thick red dot, which is probability downwards. Great. That's where you're using AutoClimate. It's a free app on most platforms you can use it on, which helps us identify where the probabilities lie. Probability down in this case. However, see this big sort of olive green circle thing? That's what we call a UFO, stands for unfilled orders, an auto UFO. In this case, this is showing us buyers. that start at 0.6854. Current price is 0.6871. So 15 to 20 pips away, we have a bunch of buyers. Those buyers have already worked once, twice, 3 times now to push price upwards. So even though the probability is down and therefore we should look to sell, we have buyers right there in the way. No point selling something if we have probability against us, and we can see that before we even get in. So although it lined up that we had probability down and we were close to the ideal trading price, which is what the scan tells us, that's why we need to go and check the opportunity, because here we have a big reason not to even go any further. No point selling if we've got a bunch of buyers pushing price up as we speak. So we will move on and we will look at a different opportunity. Let's come back to TradeStation. So nothing more on the daily climate with the US dollar. So let's now come down to the 240-minute climate. Aussie US dollar here again on the 240. I will not look at that because we know that we have a bigger set of buyers very close to us. So there's no point looking at that. Let's see what we have here. 60-minute climate, dollar yen. Now, let's go and have a look at the dollar yen, but I want to be clear on something. If we have volatility that might affect the US dollar tomorrow morning, 10 a.m. Eastern, and we're using small time frames to place our trades, get out before the news comes out, because the volatility may increase or is likely to increase the chances that we get stopped out, especially if we're using small time frames. Now, you might be somebody that is particularly, what would be the word, maybe risk tolerant, risk comfortable, in which case maybe you're fine with that. But for those that are a little bit more risk averse, bear that in mind. You don't want to be trading something where we know volatility could stop us out. The smaller the time frames, the more chance there is for that to happen. So let's just wait for this to load and then we'll have a look at this opportunity here, dollar yen. I think it was a short, but we'll wait for it to load to confirm here. It's taking its time. So if we're using an hourly on the left-hand side, by the way, guys, we would be using either an 8-minute on the right-hand side, or it could be a 5-minute or 15-minute. That's what we're looking at here. What's most important, as long as the time frame on the right is smaller than the time frame on the left without being too far away, that's fine. It doesn't need to be that we always use, for example, a 5-minute chart on the right if we're using an hourly chart on the left. Could be a 15-minute, could be a 10-minute, could be an 8-minute. That's fine, providing that we're following a structure and following a methodology. Okay, so speaking of, here we have a thick red dot, probability downwards, and we've got quite a way to go before we hit any buyers. So different situation than we had last time. So going in our favor so far. Now, what we also want to look at is the EMA number here. So if we look here, if we check this box over here, the MA9, program this to be an exponential moving average, is at 138.62. Let's round that, 138.62. Now, what we want to do is be getting into a trade using the UFOs on the right-hand side that coincides with that EMA number, which is 138.62. Why? Because the UFOs, as we know, show us where buyers and sellers are. We want to sell with sellers. Now, we only want to sell with sellers if they're also in an area where we have increased probability of selling, which in this case will be at that EMA price, because price is beneath the EMA. So we're adding probabilities together, essentially. Probability down from auto climate, probability down from our sellers here, and probability down from them hitting the EMA. So we want that EMA to coincide with our red UFO. Now, as we can see, this red UFO starts at 138.65. Let's round that down, 138.65. Meaning it actually starts 3 pips away from where we want it to start. However, EMA, the M in EMA stands for moving average, right? So as price moves, so too does that average. So price is currently at 138.54. If that went up to 138.65, would the EMA from the bigger time frame move with it? Chances are yes, chances are it would coincide. But let's just have a look at a different time frame, see if we find anything there. We don't, so we'll stick to the 5 minutes. So I think based on the way price moves, I would think that we would coincide here. We are anticipating the amalgamation of those two probability factors. You could put an alert in, so that you can place the trade much closer to the price if you want to do that. But for now, I think we will take this and go with it. So I'm going to bring up, if we have it over here, our log. And we're just going to write these numbers down, and I'll go and place the trade on TradingView. Why? Because I personally think it's easier. That's why I use TradingView to place trades. So 1 hour and 5 minutes, we're going short. The entry price is 138.65. We're rounding that down. The stop loss price, 138.717, but we're going to round that up to 72. We're going to add 5 pips for wiggle room, and we're going to add 2 pips for the spread. So 138.79. Okay, now in terms of our final target, let's switch this over a little bit. Our final target, we'll work out our safety target in a minute, but our final target is going to be 137.67. 137.67. I've taken the closest stack of buyers on the bigger time frame, and I've rounded up by a pip and then added a couple of pips for the spread. So 137.67. So those are the numbers. I'll put that to the side. We will go to TradingView and we will place this trade. Okay, so US dollar, Japanese yen is around. We don't actually care about the UFOs in this case because we're following the data from MetaTrader. Of course, the most important thing, if you're placing trades on TradingView, obviously that it's connected to your broker. And if you're trading with a specific broker, then you want the data from that broker to guide what you do. So even though the data will be slightly different, if you look at a TradingView chart, use the data from MetaTrader, which is what we're doing here. Okay, so I use the Fibonacci tools, and sorry for those of you that use them as they were intended. I use them as a drawing tool so that I can more easily track what I'm doing, what I'm looking at. So 138.65 is the entry, and 138.79 is the stop. Other way around. I want the black line to be the entry. 6579. Brilliant. Okay, we had our final target. Let's draw that in with a green line. That was at 137.67. There we are. So quite a decent return or reward to a risk ratio there. Let's now figure out our safety target. Now we use 2 different targets. Clue is in the name, hopefully. The final target is the one where we're going to take it to hopefully its end of the trade, if it goes all that way. Our risk, by the way, I always put $50 just so I can do $100 as a nice round number. You obviously choose what you want to risk. So we've got our final target, which in this case would be a 7-to-1, which is ideally taking it to its final place, to its final place where we can take profit. Now our safety target, again, hopefully clues in the name, our safety target is there to keep us safe, meaning if we are right, but not fully right, and it goes a little bit in our favor, but not necessarily 7-to-1 away, then at least we break even. So that means we want our safety target to be 1-to-1 away. Now what this does is it will essentially halve the overall reward to risk of the trade. So we'll have, so this is a 1-to-1. So let's say you put half the trade and it hits 1, the other half of the trade hits 7, then overall I think it works out at about a 3.5, 4-to-1, which is still obviously a good return. However, we do that so that if price goes a little bit in our favor and then against us, we break even, because we'll take half the trade and then we'll lose half the trade. You could just do the final target. What would happen is your probability of being right goes down, but what you make when you're right goes up. You could decide to only have a safety target, right, and just take 1-to-1s all the time. Your probability of being right goes up, but what you make when you're right goes down. And it's a balance of those two things that ultimately give you your return or your profitability. And neither of those are right or wrong, by the way. It's what you find more comfortable in terms of your risk tolerance, how comfortable you are to maybe only be right 2 times out of 10, but make 10 times more when you're right than when you're wrong. Or if you'd rather be right 90% of the time and just make little bits here or there. Again, it's up to you. Neither is right or wrong, as long as it's profitable at the end of the day. Okay, so that's our first trade. I'm going to put a little note in. This was placed on the 31st of August 2022. We used a 1 hour and a 5-minute MetaTrader data just for reference there. So it's easy to come back and look at next time, or for me anyway, when I'm logging the trades and logging how they panned out. Okay, right, let's come back to trade selection. And again, those of you that are with me live, if you have specific markets that you want to look at, specific trades you want me to analyze for you, just let me know in the chat box and we'll divert and go and look at those. Okay, we've already placed a US dollar trade, and although we do actually have some new opportunities that look like they've come up here, I'd rather divert and now be looking at cross pairs, because we know that the US dollar is likely to see volatility by the end of the week. Obviously, the greater the volatility, the greater the risk. Can also be greater the reward, but I would rather steer you guys away from risk. So let's now take a look at bigger time frames on the cross pairs. We've just placed a yen trade. So we've got, by the looks of it, a few yen opportunities here. In fact, actually, sorry, the only 2 opportunities we have here are the pound yen and the Aussie yen. So again, it's okay to double up on that, but be aware if you're placing a something yen currency pair trade and you place that 3 times, so dollar yen, pound yen, Aussie yen, you're trading the yen 3 times, which means if something random happens with the yen, you might be stopped out of all of those trades. You might also win all of those trades. So you're adding correlation to the mix here. Again, not necessarily a problem, depends how you view your risk. Let's take a look at the pound yen then. Pound yen. I always use Oanda data, but again, you guys pick what you want. It's make sure you're using the data that coincides with the brokers that you are using. So daily on the left, and I'm going to look at 55 on the right. We'll bring our UFOs back as well. And do we have UFOs here? Should do. Oh, they're just a long way away. Okay. So Aussie yen, bear in mind we're already short the dollar yen on small time frames, okay? So this is on bigger time frames now. Thick red dot on auto climate. Again, free app on most platforms you can use it on. Tells us probability there is to the downside. So we've got probability down. Now, we do have sellers on this chart, but they're a long way away. And we've got buyers on this chart, also a long way away. So we've got room to take it to our final target if we're right. Now, our EMA is 161.74, 0.75, which is, let's just draw it on the chart. I'm going to change the color of this to make it distinguishable. So it is 161.75. So that is nice and snug within this UFO here, and therefore that's the UFO we use. That's our entry and stop, and we will use that as our trade. Again, it's all very, I think, and what I like about this, it's all very structured. It's, does it hit this number or not? Does that line fall into that box or not? Or is it likely to based on movement or not? Do we have room to take it to a profit or not? It's a checkbox exercise. If we check all the boxes, we place the trade. If we don't, we don't, and that's it. Basically, it's very, I find it much easier to do than maybe a lot of other things that require a lot more analysis. It's much more mechanical. Okay, so the entry, we're rounding down this bottom number. So 161.678 becomes 161.67. Our stop loss, we're going to take this top number, 161.91. It's already rounded to a closest pip. We're going to add 5 pips for wiggle, and we're going to add 2 pips for spread. And there we go. That's our entry and stop. Now our final target is going to be down here at the closest stack of buyers. And they are at 154.695, which is the top of this UFO. So I'm going to round that up to the closest pip, then add 2 for the spread. And that's it. That's our final target. Again, quite far away. It would be very nice if we got it all the way down there. Unlikely, of course. The greater the reward to risk. Look at that. Very nice. The greater the reward to risk, the less likely we are to hit it. It's just how stats work, how numbers work. But that's where we currently have the highest probability that price goes to. So that's what we'll take. Things change in the meantime, so we manage the trade as well. So just to see here, that overall risk to reward, if we were right and only placing this one half of the trade, would be 22.42 to 1. So not a bad reward to risk. But like I said, unlikely to get there anyway. We'll probably manage it out at some profit if we're right somewhere along the way. So it looks like we entered that trade. We'll go and look at it in a sec, see what happens. Okay, time force. Brilliant. So that one half of the trade has gone on. Let's put the second half on, and then we'll put this on our log as well. So same entry, same stop, same risk. Again, I put $50 for each side. You guys choose what you want to choose. 31 pips of risk, meaning 31 pips of reward for our safety target. Gives us that number. And here we go. Okay. So I'm just going to squish this out a little bit. We know that our final target's all the way down there. So again, if we are right, if price comes up and hits our entry and then moves down from here, it might hit our first target and move back against us. That's a break even. It could hit our entry, move in our favor. Something changes along the way. We end up closing out early. It might be because the climate changes. It might be because new UFOs are formed. It might be because volatility is coming. Whatever it is, there's going to be different reasons that we manage our trades, that we close out early, and maybe we get out at a small profit or a small loss. Of course, maybe it goes completely against us, straight through, stops us out. That happens too. That's why we put our stops in and we know what our risk is. It's predefined before we get into the trade. And if we're right and it goes all the way down to 154.72, that'll be a great trade. It'll be a happy day. So we will see. Let me put a little note in. So place the 31st of August. It was 1 day and 55 minutes, and it was Oanda. I mean, it would be on Oanda anyway. Lovely. Okay. Brilliant. So I'm going to bring it up and just pop it on the log here. And we want to make sure that we keep things in a log. Not just because I speak to a lot of people that say, well, yeah, but my platform keeps a log of my trades, which, okay, yes, that's true, but it doesn't keep a log of necessarily why you place the trades or of different things you could use to actually help in terms of, so I'm just checking here, so safety target. In terms of, if we realize, just by logging the time frames, for example, that we used, if we use different time frames sometimes, well, maybe some of the time frames that we use work better than some of the others. Our platform isn't going to know that. Our broker isn't going to know that. All they know is the numbers, right? When you bought, when you sold, at what prices. It's not going to tell you the contributing factors to the success of the trade or not. So you want to keep a log to keep track of things like time frames, any kind of variation in strategy that you might be testing. Was it at a round number? Was it coinciding with a Fibonacci retracement? Was it coinciding with news that you would interpret to mean the same thing? Whatever it is, you can use these kind of logs to get an idea of what's working better in your business, which trading is, it's a business. What's working better in my business or not, and therefore what do I do with my strategy? Okay, coming back to TradeStation. So we've looked at the pound yen. I would be cautious to look at another yen pair, but in this case it's a long. So in a sense you are not correlating this because the others we've gone short. So let's have a look at the Aussie yen. Okay, so this is going long. So we've got no red UFOs. So we'll have a trailing stop here. I'll explain that when we get to it. Thick blue dot on auto climate here. Probability there to the upside. We've got our EMA at 94.93, which is, let's just draw this so we can see, 94.93. So this is where the EMA is. So again, if price were to move down to this UFO, which starts at 94, the entry would become 94.91. Is it likely that if price moves down by 20 odd pips, would the EMA move down by 2 pips in order to coincide with our trade? I think likely yes. So we could use this one. Let's have a look quickly at the 1 hour, see if we've got anything different in there. Nothing different in there. Let's go back to 55. I think we're likely to see this line up. And again, I don't like to use in trading phrases like I think or I feel, because that's not very objective. We want to try and keep objective here and put it into a checkbox system. Now, based on the way that I understand price moves, it's very likely that if price drops 20 pips, the EMA would drop by 2. However, what you could do is put an alert on so that you can look at it when price is much closer to the potential entry. Or you could put the trade on and keep coming back to check it again and again, put an alert on so that maybe you cancel the trade last minute if it's not lining up. And I'm going to place this trade because in my experience, it's more likely to happen. But like I said, you could be more conservative here. So entry price 94.884. So we're going to round that up. That was TradeStation telling me that the market's open. Thank you, TradeStation. So 94.91, because we're going to round it to the closest pip up, which is 94.89, and then add 2 pips, 94.91. Bottom number here, 94.626. Round that down to 94.62, and then we're going to take 5 pips away for the wiggle room. Brilliant. Okay, so this is our, let's move that out of the way. This is our entry and stop here. Now our target, we don't have a final target because it's not, we don't have any sellers here. If I squish this, there are no sellers to see to know where we can take this. So in which case we're going to have a trailing stop. I'll explain that in a sec. Let's figure out our safety target. 94.91 entry, 94.57 stop. Risk, same as I always do. Again, you guys decide what that is for you. 34 pips of risk, then 34 pips of reward for the safety target. Thank you, TradeStation. Go. Back here, so those coordinates are 95.25. Brilliant. That's our safety target. So let's put that in. Now, the second half of the trade, same entry, so 94.91, same stop, 94.57, same risk, which again for me as the example is $50, but we're just not going to take profit. So if we click buy here, what this now means is that half of the trade triggers knowing that if it goes to here it gets out. Half of the trade triggers knowing that if it hits the red line it gets stopped out, but if it goes up it can go up indefinitely. Now how's that helpful when we're trying to be objective here? What we'll do is, if this were to happen, so price came down, entered our trade, moved up, another green UFO appears, so another green UFO that looks like this, say here, then we move our stop loss from there and we put it behind the new UFO. Price moves up, new UFO appears, we take our stop loss that would have been from here and we put it there, and so on. So we trail our stop loss, we move our stop loss to lock in more profits as price goes in our favor. That's what we would do here with a trailing stop. So let me put a little note. So placed 31st of August 2022. This was a 1 day and 55 minute, and target 2 was trailing. Again, I find these kind of things just so much easier when I'm looking at it to come back later. Just going to quickly fill in our little form here, a little log. So this was again another yen pair, but in this case we were actually going long. 1 day and 55 minute long. Entry 94.91, stop loss 94.57, safety target 95.25, and this one is trading. Now I will go and update the other elements here, but I won't make you guys sit and watch me do that. So I'll do that later. If you check on by the end of the day, it should all be updated. Now just to show you here, actually, if I now come and I refresh this page, which again, tradewithufos.com/Becky. If we come down here, we should now see, yep, there you go. You've now got them there. So it doesn't take very long to update, and you'll see all the information on there. And then you can track it over time and see what happens with these trades. Now saying that, let's go and have a look at our US dollar trade and see what's happened here. Looks like we might have been stopped out already. That happened quickly. Yeah, looks like we were stopped out. So let's just take a quick look here. No, not 5 months, 5 minutes. Okay, so that happened before. Okay, let me squish this out. So this unfortunately was a losing trade. It happens. Would have been nice to have obviously grabbed that entire profit there, but these things happen. What we can see here, price crossed the EMA. If I make this big, price came in, it was within, the EMA did line up with our UFO, everything was going in our favor. Price has then, for whatever reason, shot through and now crossed the EMA. Now, obviously not all of the time, but the EMA often works as a place to bounce from. As we can see here, price was above the EMA, came back, bounced from it, came back up. Looks like it touched the EMA at this point, came back up, came back, touched the EMA at this point, came back up. So we expect that the EMA will be respected. Not all the time, as we can see here. Price came up, hit the EMA, went down from there. Came up, hit the EMA, went down from there. The EMA is usually a place where people buy and sell at, depending on whether or not price is above the EMA or below it. If price is above the EMA and comes down, people buy. If price is below the EMA and comes up, people sell. And that's what we were anticipating here. That if price came up and hit the EMA, people would be selling, and we were within sellers as well on the right-hand side, and we had probability down here coming from the climate. So we had our probabilities lining up. However, the only thing we can expect from the markets is that the unexpected happens, and it seems here that something would have been strong enough to not only push price through the sellers that we had, but to push it also through that EMA price. So a lot more buyers, for whatever reason, and we're never going to know why, but for whatever reason, buyers were strong enough here to push through the probabilities to the downside. That's why we have our stop loss in. Right? We want to know that if we're wrong, if something happens that we don't expect, which happens all the time, that we're protected and that we don't lose any more than what we are willing to lose or comfortable to lose. That's why we use our stop losses. So it's a shame that our small time frame trade there didn't quite work, but if we come back to the pound yen, and we're looking at a day and a 55 minute. Wonder why that wasn't adding up there. The pound yen, interestingly, is pushing down, but the dollar yen was pushing up. So again, these things happen, but hopefully what we'll see is we'll either be right on the short on the pound yen or the long on the Aussie yen, because we're going in different directions. So hopefully one or the other of them will give us a return. So let's come back to TradeStation, look at our new opportunities. We've already looked at these two. Now there's nothing left to do here, even though we see the near sensible longs here. We've got grey boxes in there in this column. Those grey boxes tell us that there aren't clear probabilities in either direction, so we don't want to trade them. So let's move to the smaller time frames, the 240 minute, and we'll start with the Aussie New Zealand. Let's go and take a look. Aussie New Zealand, and we are doing a 240 on the left, so 4 hour, and we will do a 21 minute on the right. By the way, Ray, I did see your message there, and I know it's a shame not to be able to physically get together anymore and go through trades, but hopefully the online versions help at least. Okay, so Aussie dollar versus New Zealand dollar. Thick red dot, probability down. We also have sellers nearby, which is helpful. And we've got a way to go before we hit buyers. Brilliant. On the right-hand side, we've got a bunch of sellers back to back to back, all on top of each other. That also goes in our favor. The more points in our favor, the more probabilities we have, right? The less likely we are to lose. Obviously not definitely, but the more the merrier. The EMA is 1.1196, which is within this first UFO. However, what we're going to have to do, which I kind of don't like doing, but we're going to have to do it here, is take all of this together because they're all overlapping each other. One UFO begins where the other one starts, or where the other one ends. So we don't want to be putting our stop loss in the middle of sellers, because if we're selling, then a stop loss is a buy order. We don't want to put a buy order in amongst sellers. We'd rather, if price is going to push through all of these sellers, let it push through all of these sellers by the time we get out. So it's a wider risk. It's not too bad, and we've still got room to take some form of profit. So let's go for it. Okay, so the entry price will be this bottom red number, which is 1.11924. Round it down to 1.1192. The top red number is 1.1221. We're going to add a couple of pips for spread, and then we're going to add 5 pips for wiggle room, and that will be our stop loss. Now, if I just clone this, we can see, because we want our final target to be further away than our safety target. So we can see we've got room to take a 1-to-1, and then if we hit these buyers down here, it's a 1 and a bit to 1. Still worth taking as long as it's more than 1-to-1 in our books. So 1.1142, nice and easy. It's a round number already. Just add 2 pips. Okay, let's put this in. 0.1192 to 1.1228. Risk, again, you guys pick whatever your risk is. I do this as an example. Final target is 1.1142. So it's a 1.39 to 1. So overall, if we were right on this trade, it would end up being like a 1.15 to 1 or something like that. It's going to be a very small return. But as we say, as long as it's more than 1-to-1, for us, it's still worth taking. For you, it might not be. You might have a minimum requirement. So if we've got 36 pips worth of risk, then we want 36 pips worth of reward. That takes the safety target to 1.1156. Put that in. And we'll put a little note in here. So placed 31st of August 22. And this was a 4 hour and 21 minute. Nice. And we're already in this trade. So we've just been triggered in it, I think. I thought that's what just came up. Maybe not. Looks like it's very close. So we will see how this trade pans out. Again, we've got a lot of things going in our favor here. Mainly the fact that we've got sellers after sellers after sellers after sellers. You'd need so many more buyers to push through that, as well as probability down from the climate and the EMA. As we know, as we saw in our smaller time frame trade anyway, not always the case that just because we have probabilities lining up that we're going to be right or that we're going to make money. Always manage our risk. We never know what's going to happen in the markets. We can only, as far as I see it, we can only almost guess to the best of our ability using probabilities and statistics to guide us. So it's as objective as it can be. But we will be humbled by the markets quicker than anything else in life if we think that we're just going to be right and not put stop losses in. So we want our stop losses there to keep us safe. Okay, so I'm not sure if we've got time, because I think these ones are normally 45 minutes. So I don't think we've got time to go through another trade, but I tell you what, let's try. So we've done Aussie, New Zealand short. We've done the Aussie a couple of times. So let's look at a Canadian Swiss long. I think that's something that we haven't looked at yet today, either of those currencies. Let's see if we've got enough time to put another trade in. I will go and update the log as well. So you can track afterwards. I know I didn't put that last one in. You can track afterwards what's going on. Looks like we had a trade here from a long way away. What happened there? I think we cancelled that trade. Okay, again, I will update. Let's take a look at what we see for today. Thick blue dot, probability up, sellers quite a way away. So that's good. The EMA is 0.7450, which will coincide with our trade here. So perfect. We're going to add these two UFOs together because they overlap. Our entry price will be 0.7450. So we're going to round to the closest pip, which will be 48, and then add 2 pips. The stop loss is 0.77434 minus 5. The wiggle takes us there. Very nice. Okay, great. Let's put it on. Looks like it's moving reasonably quickly, so hopefully we get in this. Okay, so our final target will be 0.7530. Let's put that in, which is here. 0.7530. And the first half of the trade, same entry, same stop, it should remember, same risk. And if it's 21 pips worth of risk, then it's 21 pips worth of reward. That is 7471. And there we go. Brilliant. So we have our last trade of the day gone in. Let me put a little note. So placed on the 31st of August 22, and it was a 4-hour, 21-minute time frames. So we've placed 5 trades. I will update it on the sheet, and then in a little while, if you guys come to tradewithufos.com/Becky and then have a look at this live session notes on the Forex tab, you'll see those extra trades put in there with the numbers, and I'll update the trade that we were in. And then you guys can use this as a place to track trade management and how things are going. You've also got different resources at the top here you can use, and at the bottom, a question and answer section as well. So hopefully this page can help with a lot. If not, you can email me, becky@tradictive.com. Okay, that brings us to the end of today quite nicely, I think. We managed to place a trade in the nick of time. So brings us to the end. Thank you for those of you that have been with me during the live session. Hopefully you found this useful. Any questions, any help you need, please do feel free to get in touch. I'm here to help, and I will see you guys next time. Thank you very much.